So whilst Bitcoin is hovering around 60K, this could be one of the most important signals of this entire cycle. In 2021, for reference, when Bitcoin lost the key level of support, it just simply collapsed. But when you look at 2025/6, we have a completely different story. In today's content, we're going to break down the exact weekly level deciding Bitcoin's future, the key difference between 2021 and today, why this breakout attempt matters, and the trade setup that I'm preparing for next. If you want real-time updates on an active trading environment, make sure you're subscribed to the channel, turn on notifications, and join the free Telegram below. This is where all the execution actually takes place. This is Bitcoin on Point. Let's dive into the content. And we're going to begin with today's macro backdrop, which is heating up. Because whilst retail is still debating whether this is a bounce or a trap, nations are stepping in. Kazakhstan's central bank is allocating $350 million from gold reserves to buy Bitcoin and crypto. This is sovereign capital rotating from gold into Bitcoin and crypto assets. So this is a shift alone that should tell you where long-term confidence is actually moving. Now, at the same time, Raoul Pal just issued a major warning. He believes Bitcoin should already be at $140,000 based on certain liquidity conditions. But here's the key part. Global M2 is surging, the dollar is weakening, and liquidity is expanding again. So Bitcoin historically, right, it doesn't tend to move first. It actually waits for that liquidity to build, and then it explodes. Now, to add to that fuel, Michael Saylor has confirmed he plans to permanently remove access to 17,000 Bitcoin with a total valuation of $1.5 billion. Now, what we're talking about here is supply destruction, and this points to long-term conviction. So this kind of environment is usually how the early phase of a major expansion looks. We see quiet positioning before acceleration, and when liquidity meets compression on the charts, that's where parabolic moves actually begin. So let's take the macro wrap up into our charts, and we're going to begin by looking at Bitcoin on the weekly time frame. Now, on the channel for the last couple of weeks, we've been discussing this key level of support, and this sits between 70 to 60K. Now, the importance here is because in 2021, it was the prior all-time high and a major level of resistance. Fast forward to 2024, Bitcoin rallied up to it from a bear market low and then started correcting and trying to turn it into support. It formed this sort of bullish broadening wedge structure, flipped that same 60 to 70K level into support, and then pushed on to new all-time highs. Now, since rallying to the all-time highs, we've now retraced back down to that exact same launch pad from 2024 and are looking to turn it into support again for continuation to new highs. So I hope you're with me. It was prior resistance. We got the breakout in 2024, rallied to new all-time highs in 2025, and now in 2026, we're back down at the same launch pad. So if we hold this level, if we respect 70 to 60K and build some sort of base, this is our ticket out of the wood to start sort of pushing back at least towards near 95 to 100K, and then of course the 126K all-time high. This is the foundation level that could be building and respecting that structure. However, if we lose support, and this is why it's so critical in this level, if we lose 60K, that opens the gates towards 50K. And again, that's another level we've been discussing on the channel. It was the wick low from August of 2024 that could potentially be filled in if fear gets any worse. However, again, if we do sweep down to these levels, even greater opportunities present themselves. Whenever Bitcoin does have large corrections or bear markets, historically, they make great opportunities to push to new all-time highs. And that's been since data began. So the greater it retraces, the greater the impulsive pace. That's kind of what I'm trying to say here. So 70 to 60K on the weekly is the major level to defend. Now, with that in mind, we're going to look at it in comparison to 2021 and 2025. So where we sit today and back then. And there are some key similarities in the charts and some key differences. Now, we did place a double top in 2021, and we've also placed a double top in 2025. And structurally, we did also see a bearish flag structure breakdown then, and we've also seen a bearish flag structure breakdown now. However, so those are the similarities, right? However, Bitcoin essentially didn't hold any support. back in 2021. It lost the structure after breaking down of the bear flag and continued to cascade. There wasn't much relief. There wasn't much momentum, or buyers actually stepping in. It just fell through the floor. Now, if you look at 2025, again, this is where the difference is. Yes, we've got the bearish flag structure, but Bitcoin's broke down and is respecting the support from 2024. So this is the key difference. This is what could actually be guiding a low being formed here before pushing to new highs. In 2021, there was no structural support foundation. It just cascaded. In 2025, we are holding support. We are seeing structure try to form. 2026, should I say, right? From 2025 all-time highs and into this breakdown. So if we have met the bear flag target breakdown and we do build a base, this is the positive sign for bulls, right? However, again, if we do get it any lower, the support just simply gets dragged down right to the lows from August of 20 and September of 2024 at 50K. That's as simply as it could be. And then you could say in some respect it would look similar to 2021. However, for now, for the time being, there is a great chance that 60 to 70K could mark the low. Now, we've wrapped up Bitcoin on the larger time frames. Let's look at the 8-hour time frame, right? And we're zooming in here for Bitcoin. And we did recently have a breakout attempt, right? This was in the early hours of this morning around 5:30. Bitcoin did yesterday correct back down towards sort of 62K support. And this is the support that's been holding since the beginning of February. So we do have a support foundation at 62K, but we also have this major level of descending resistance. Let me turn that into yellow just so we can see it a bit clearer. We have this major level of descending resistance, and we did recently tap into that looking for a breakout. However, you can see we are starting to reject. So we're caught on the lower time frames between descending resistance and this horizontal level of support. 62K is the current level to hold. However, if we break descending resistance in the near short term and continue to build these higher lows here, this is where we're looking for that push to 90 to 92K, which is the major imminent resistance to break. So you see how it all ties in together. We're looking at sort of 70 to 60K to mark the low on the weekly. That ties into the 8-hour time frame, which has been respecting that sort of territory since February. However, there is resistance to break, and there is also downside potential targets towards 50K if things get ugly. So this is why 70 to 60K is a critical level that we're monitoring on the charts. It may get boring trying to monitor it for a few weeks. Bases take time to build or decisions take time to unfold. However, these are the key areas we have to watch. Now, with Bitcoin wrapped up, let's look at our trading environment, and we're going to begin with our ETH trade. Now, this was looking relatively positive. The structure was clean. However, we did move our stop loss to break even, and although we were looking at successfully managing our TPs and our profit zones, we did see bullish momentum, step in. And now that poked above, and we've hit in break even. So, if the bearish structure does form again, I'll potentially look for a short. If bullish momentum continues to build, we simply just have to flip our bias. We follow the structure, not the ego. So this trade is now out of the window. We win some, we lose some. It's break even, no biggie. However, now there are new trade setups that are actually forming, and we're looking at Chainlink. And this is on the 1-hour time frame. And the area of interest we actually have sits at $8.80. Now, the breakdown of this trade is simply because Chainlink had this local high and it entered what looked to be a 5-wave correction to a local low. Now, from this local low, it has built a foundation and it did witness this relief rally, which again looks like it had some sort of 5-wave impulse. A 1, a 2, a 3, a 4, and a 5. Now it's locally topped out. So this is a lower high to the prior highs and signals that we're looking for this retracement. And on this retracement, what we're looking for is to mark a higher low. And this is why the $8.80 area is our sort of target for the entry. And the reasoning behind that is because since this lower high placement, the correctional targets on the fibs between the 050 and the 0618 sit between sort of $8.70 to $8.60. So we've played it safe at $8.80, which is these current lows from the last sort of since early hours of this morning. And if we get that entry, we may sweep below. But again, this is the demand zone where we're expecting that reaction. And this is where we could see that macro wave up to our TP targets, which sits at roughly $9.69. So that's the breakdown. We had a rally up into a high, 5-wave correction, 5-wave impulse, lower high formation, come back, build up the liquidity, hold the fib demand zones on the key pockets, entry, get the execution, look for the success. That's simply how it's monitored, right? So that's the breakdown on Link for you. And of course, guys, look, head over to our Telegram. The link is in the description. This is where all the trading activity, the executions, the stop losses, all of that is shared. And you can also head over to Profits Precision. The link for that is in the description. You get 30 days of free access, and it's a brilliant dashboard to just monitor everything in one place. And on our dashboard, we're taking an account from $10,000 to $100,000. We are up 11% with 10 total trades, with $1,160 in profit. And we're just active in this environment. Yes, there's volatility. Yes, there's confusion and retail is panicking, but there is also times to capitalize, and that's exactly what we're doing. So do head over to Telegram, make sure you're locked in, and I'll see you